Thank you for joining us once again here at Seafried and Brew for a weekly briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to review over those projections that the Fed came out with last week, as well as two important economic releases that came out pertaining to retail sales and inventories. So when we look at the Fed projections they put out last week, when we look at the overall change in GDP for 2017, they increased it from 2.4 to 2.5, so showing a little more growth. And they also increased 2018 from 2.1 to 2.5. So an increase of 0.4%. 2019 and 20 also increasing in there. So that's a positive that they're showing additional growth going out into those years. However, long run, they're still at that 1.8% GDP growth long run. And that's one thing that's kind of disappointing. We'd hope we would get an uptick in that long run. But overall, when you look at the core PCE, that inflation indicator, 1.5 for 2017, 1.9 in 2018, and 2% in 2019, just continues showing that slow growth in that inflation, but reaching that 2019 numbers. No change where they were from the last projection. Similarly, there's no change overall, at least in the first 3 years, in the Fed funds rate. And when we look at the dot plot in here, if we were to compare this to the September release, very, very similar. So they're still looking at 3 increases in 2018, and then about 2 increases in 2019. So take that into consideration as you're preparing for 2018 in here. Last year, they predicted 3 increases in 2017, and they followed through with that, doing their most recent one at this meeting where they increased rates by 25 basis points, that band. Also, we did have 2 dissenting votes for that increase. They suggested that the Fed should have held off in raising rates. So that was a little surprise that we saw 2 dissenting votes. Overall, when we look at retail sales, though, we got a fairly strong retail sales number that came in for the month of November. It was up 0.8% month over month. So that's a big positive above the consensus. And when we look at excluding the motor vehicle sales, it was actually up 1%. We saw motor vehicle sales and parts pull off by 0.2%, pulling that at overall retail sales. So that is a positive. When we look at the non-retail stores or non-store retailers, interesting, increased 2.5% over the month and 10.4% over the year compared to November 2016. So we continue to see that segment of the market grow. When we're looking at inventories, and here we look at inventories, overall business inventories down by 0.1%, and this is for October. There's a fair amount of lag with these numbers. So this is for October, down by 0.1%. However, you look at manufacturers, we're up 0.2. Retailers were even, but the merchant wholesalers really drug it down by coming down -0.5. So when you take everything into consideration, you get that slightly decline in the inventories. When we look at the overall inventories to sales ratio, that continues to come down, indicating the need to bulk up on inventories. That is a good sign for the fourth quarter GDP. We saw retailers and the retail sales improve higher than expectations in November. That's a positive sign for fourth quarter GDP. With the inventories in October falling off a little bit, we're going to need to replenish those inventories in November and December in order to match up with the overall spending in the economy. So that should lift up that fourth quarter GDP as well. So it will be very interesting come the end of January to see where these numbers for the GDP are released for that advanced estimate. But as we move throughout the next couple of weeks and into the next month, we'll continue to look at the different releases to build what we anticipate the GDP to be for the fourth quarter. The Atlanta Fed and their GDP now came out yesterday or last week with a GDP expectation of up to 3.3%, brought up by that retail sales number. And that's what we have for you this week. We wish everyone a Merry Christmas and a Happy Holidays and a Happy New Year as well. This will be the last one for 2017. We'll see you all in 2018. Have a great day and the remaining of the year.